The following is a presentation of TFNN. It is now time for The Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here, and I treasure your presence today. But, folks, my outcome is to help you to become a better money master, but really and mostly to be able to provide you with the tools that will help you to lead an inspired life, folks, because leading an inspired life, that is what it's all about. So let's go take a look at one of our tools out here. This is the tool I call bouncing back with self-encouragement, folks. If you ever, I don't know if this has ever happened to you, I can tell you it's happened to me thousands of times, it seems like. Have you ever had an exciting goal in mind? Of course you have. Now, you've done all of the homework. I mean, you burned the midnight oil, you did everything so that you were just totally prepared. And then, boom, out of nowhere, things just simply don't work out. Have you ever had that experience? You know, you burn that midnight oil, you just simply did everything, you prepared, and it just didn't work out, folks. That is when you really need to be able to be your own cheerleader out there. You've got to be able to pat yourself on the back. You've got to take responsibility, and you've got to move on to your next opportunity. So many times, what's so easy to do is you spend time in that last opportunity that just didn't work out, and that just simply is going to impact the ability to miss that next opportunity that's going to come along there. That is when you need to be able to bounce back and help self-encouragement. What you want to do is you remind yourself here, and you know this, I know this about you, you are way better than that last result out there. Just simply figure out what went wrong, and then just because that, quite frankly, whatever went wrong, that was the real lesson, because you thought you were really prepared, and there was probably just one little thing that you missed. You know, there's an old cowboy expression, and you've heard it before. It says, if you fall off a horse 7 times, guess what? You're a real cowboy. So I say get back up on that horse, folks, and giddy up on out of there. Find that next opportunity out there. 877-927-6648. That's our call-in number. Would love to hear from you. It is Fantastic Friday. As we go take a look around the markets here, you've got the Dow futures trading out at about 13,025. That's down about 14 points. The ES Mini off about 3 points. We're looking at here on my screen. If you are watching us on TigerTV, you see the 30-minute chart for the ES Mini. And, folks, if you're listening to us on the radio, maybe it's because you're listening on your mobile device, because you went to tfnn.mobi. Thank you so much for doing that. You can always catch an archive of this show on Channel 9. You'll be able to see the charts, the patterns. We're certainly going to take a look at patterns out there. The market is always communicating to us. You just have to step back. You know, you want to interpret the candles. I can teach you how to do that. You want to also understand the ABCs. It's just like going to school. You want to first learn the ABCs out there. And then what you want to do is understand how to really speak the language. That language, we're going to take a look at all the different patterns out there, the candle formations. And as we continue taking a look at the markets here, you got the King dollar back in the building today, up 28 pennies. You've got gold trading down about $2 right now, out at 16.71. Gold trading up 8 cents. Silver trading up 8 cents at $30.54. You've got light sweet crude up 20 pennies over across the pond here. Let's go first to the pond over on the West Coast. Well, that's when I say West Coast, of course, it depends on where you're at. We know we've got listeners around the world. But if we go over to Asia last night, you had the Nikkei down a little over 1%, down 107 points. You had the Hang Seng off 1.25 points, down 252. The Shanghai just simply cannot get out of its own way. It's got lower prices coming in. It was down 22 points last night. Over in Europe right now, you've got the DAX off 33 points, the FTSE off 24. And let's go take a look at our ES Mini chart out here. The ES Mini right now trying to complete an A to B equals CD down. It's actually completed the 1-to-1 level. The 1-to-1 level, folks, was at the 1397 level. Now, that 1-to-1, I think it's got more juice left in it. We'll see as the market here opens in a little bit. But your A point on your 30-minute chart, if you take a look at the futures contract, you're looking at the high that came in at 11 o'clock in the morning on August the 21st. That high out there at 1424.75. Your B point on this AB equals CD down came in at 1 p.m. on August the 27th as the market moved down into that 1404.25 level. Then the market moves up. You say, how high does it move up, Steve? You know, that's a great question. I'm glad you asked me. Let's go find out. Let's take our retracement ruler out. Let's go from that A to that B point, and let's see where good old C formed. How does that work, folks? The actual 618 retracement, $1,417. Where did the C point form? It formed at 3:30 in the morning, August 23rd. The high, 1418. And the projection, 1417. Folks, you want to make sure you understand your Fibonacci retracement and expansion. You certainly want to understand A to B equals CD. It is one pattern that you absolutely have to make a must as part of your trading system out there. Now, when you take a look at an A to B equals CD, you can move more than a 1-to-1. In fact, only 60% of the time are you going to do 1-to-1. That means that other 40% of the time, you really need to be a miner out there. Now, if you take a look at how price certainly came off of that C point, take a look at that price move on the inside track. That means, folks, that C to D leg, up until really in the last hour or so, has been stronger than that A to B leg that is out there. So the 1-to-1 completed at 1397. You're trading at 1397 right now. We take a look at what the next possible legs are or extensions. That's where you want to understand your Fibonacci extensions. You want to understand 1.272, that's 1392. You want to understand 1.618, that's 1384. You want to understand 2.0, folks, because that is the A to B equals CD up that was made last time there was an ABC pattern. That's at 1377. Let's also take a look at, how about just simply candle patterns out here? If we go back, I'm going to go ahead and blow this up on my screen here because this is important to understand, and I want to make sure that I am here to make sure that I give you my guidance and protection as best as I humanly possibly can. One of my hammer candles formed at 4 p.m. on August 14th. That low out there, 1397. That area was the last area of support on the move up. I said 1397.25. We're trading out right now at 1397. That hammer is under attack, folks. So what does that say? You trade underneath that hammer. What does that say? That says if you're long, you're wrong. Now, I've just given you the areas where it could move to, and it's hanging out right here. This is an important area that you're going to want to watch. That is on the ES Mini. If we go take a look at the daily contract out here, let's go see what the daily charts look like on the futures. Let's first go ahead and take a look at the ES Mini. As we take a look at the ES Mini here, you can see the high that came in. You can see the high on August 21st. Right now, that first level that you could expect, just simply nothing more than a normal dead cat bounce, would take you down to that 0.382 level. That gets you into the 1363 range. Now, that's also going to take you right inside the August 2nd swing point. That's the next level of any kind of swing point support that you would have. The high of that is 1383. The low of that, which I suspect is really where the ES Mini wants to first travel to, is 1349. You say, well, Steve, why would it just travel there? Number one, it's a 0.382 retracement. Number two, it would be making a 100% move of a move. Why is that important to understand? Well, you could just simply go roll over and take a look at the King. What was the King doing? The King was doing the same thing. If we go take a look at King Dollar out here, King Dollar on the, let's see, that's the EUO chart. That's from last night. Let me go pull up the King Dollar chart here. Let's take a look at the dollar index, the daily chart here. And what you can see is the U.S. dollar index. It made a 100% move of a move. Usually, folks, you do a 100% move of a move, and the market wants to do something else. Why? It's like the finish line. When you get to the finish line, if you ever watch a racer, in track and field, it works the same way. Maybe mentally you don't associate it with that, but when you got a finish line out here, and there's nothing more than a finish line for bulls and bears out there, you're going to do something different. You're going to take a rest. Now, that is unless you're running a marathon. If you're running a marathon, you're going to go right through that checkpoint. That's really what bonds are doing when it got to that checkpoint of that 0.382 retracement. We'll take a look at that a little bit later on. But let's go back to the daily chart. out here. This is the reason why it looks like to me the ES Mini wants to at least travel down into that August 2nd level. It's just like a magnet down there. And really, a 0.382 retracement is nothing. That's really something that the bulls ought to be looking for. If you were preparing and you were taking a look from a bullish standpoint, you would be saying to yourself, you know, this would be a beautiful setup if all it did was move to the 0.382 level. You say, why, Steve? I say take out your engine. Your engine ought to be a rubber band. You ought to wrap that rubber band all around your finger there as tight as you possibly can. And here's the deal. Here's the springboard, folks. Back that off 38%, let it go, and take a look at that energy. Maybe you got a big rubber band. Then rewrap it again, back it off 61%, let it go. Which one has more energy, folks? The 382. 618 is just simply the normal retracement. That would take the ES Mini back into the 1324 level. That is normal, healthy, nothing wrong with it. We see it happen all the time out here. Doesn't matter on what time frame chart that you are looking at. That is what is going on in the marketplace. Let's go take a look at the other futures contracts out here. Let's take a look at the NASDAQ futures. NASDAQ futures, really the strongest out here. NASDAQ futures creating a bearish engulfing candle yesterday. And a little bit lower close today. You got the NASDAQ futures closing out at trading out at 27.58. Where's that 0.382 retracement on the NASDAQ futures? 26.62, folks. That would be a beautiful thing if you're a bull. Why? Because look at all that energy that would still be left in that next move up. That is on your NASDAQ futures. Let's go take a look at the Russell 2000. Take a look at the Russell 2000, then we'll come back to the Dow here. If we take a look at the Russell 2000 really being the weak link here in the chain. The Russell 2000 getting back into the May 1st area. So it had a little bit of strength. At least it got back up to the May 1st. May 1st was the swing point that it got it back up into in July 5th. So the Russell was the strength up there because it had gotten the highest. It had made the highest retracement coming into July 5th out there. And that is you got a strong area of resistance right up in there where it got into on August 21st when it got up to the 827 level. Right now, the 0.382 retracement, and where I really expect that we will see the Russell move down to, is also August 2nd. What does that say? It says the Russell being weak out here wants to actually do the 0.618 retracement dance, whereas the others, when they get down to that August 2nd level, will only be doing a 0.382 retracement. August 2nd would take you down to the 761 to 778 level. The actual 0.618 is 767 out there, 766. Let's go take a look at the Dow, see what the Dow is doing. As we close out, a quick look here at the futures contract. You got the Dow futures trading out at 13,036 right now. It is trading inside, let's see here. It is trading, it's touched the August 2nd candle here. The high of that is 13,030 or 13,036. Important to watch this. This is going to close inside here. That's going to give you the confirmation that you're looking for, that the Dow wants to trade all the way down to that August 2nd candle. Now, you can put channel lines on here. We certainly can do that. Why don't we put just simply the trend line? Let's go from the bottom of the June 4th candle all the way up here into the July 25th level. What does that show you? As the Dow futures would be coming right back down into the trend line, just simply doing the 0.382 retracement, folks. 877-927-6648. Give us a call, folks. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go you want to see a beautiful chart out here? Let's go take a look at just an absolute thing of beauty, and it's a chart that you really want to be paying attention to anyways. It is the Queen. You got to pay attention to the Queen out here, and we're taking a look at the Euro-US dollar currency pair. Now, you take a look at, if you're watching this on Tiger TV, you're seeing just simply absolute beautiful patterns out here, patterns that show you areas of resistance, of support, where things are completing, and the Euro right now trading out at 1.25, and just a couple of ticks above that. Now, what we're looking at here, yesterday, when you take a look at yesterday's action, boy, it gave you absolutely everything. It completed 3 patterns, and there's one other pattern, in essence, that is completing today here. Of course, we won't know until the trading session is over, but let's go take a look at what we know right now. Now, the very first thing here, I've gone ahead and tried to draw in the head and shoulder pattern. So that was an inverted head and shoulder pattern that was created out here. The left side of the shoulder is down here in the July 13th time frame. The right side of the shoulder, so you got beautiful price movement. You got beautiful time movement out there coming in on the August 2nd level. And then the head forming right down here on July 24th. So you got an inverted head and shoulders. That sets your neckline. That is this black diagonal line that's going up right across here. And what the Euro did yesterday, got up and absolutely tested that area, and while it was doing that, because it pushed up a little bit over it, what it did was it created a butterfly pattern. That is this lighter blue pattern that's in here. It created a 1.618 butterfly pattern, got a little bit above that area, and so you've got now it's a butterfly cell pattern. The neckline of this head and shoulder pattern, that is resistance area. Nothing like having clarity out there. Nothing like having a line drawn in the sand. It makes trading a whole lot easier. And it's so wonderful to be able to watch and see what, you don't have to pay attention to the news. All you have to do is pay attention to the patterns that are out here. This will tell you what the actual traders are doing, exactly what the bulls and the bears are doing. At the same time that it was creating that little shorter term butterfly pattern, it was creating a larger term Gartley sell pattern. That Gartley sell pattern going all the way out to the highs from June 18th when you had the euro trading out at 1.27463. So you got a 0.786 Gartley sell, a 1.618 butterfly sell, you got the neckline of the inverted head and shoulders. What more could you ask for? Well, what you could ask for, folks, is what you're getting right now today. What you've got today here is a bearish engulfing candle that is unfolding here. You get a close below the price point of yesterday's open, which is 1.25608, and you can see you're trading well below that right now. That is setting up a retracement of the euro. So you've really got everything just kind of drawn in the sand here. This is the chart. These are the patterns that you want to be able to learn out there. I'm sure there's a fourth pattern out there, fifth pattern, probably the A to B equals CD, the larger term. If we go take a look at from the lows of July 24th, the first A to B equals CD pattern out here. Let's go take a look at that. Oh, how did it do that? There's the other pattern, a 1.272 A to B equals CD, completing that with a possible bearish engulfing candle out there. You know, folks, you don't have to pay attention to any of the news. If you pay attention to the news, it is troublesome. You don't even have a clue as to what's going on. You got one guy saying this, another guy, one guy wants drugs, the next guy doesn't want the drugs. What are the drugs? We're talking about quantitative easing. We're talking about just flood the environment with all the dollars, as if that is really going to solve the problems out here. Solve the real problems, Let's get our folks out there to get up on their horse, because all they do is fall off the horse out there. Let's get them up on the horse, make them become real cowboys and cowgirls out there, and fix the problems. It's not going to be fixed by flooding the market with cash out there. All that does is confuse people on what to do. I say, don't pay attention to that confusion. Just simply look at the charts. You got all of the information that you need right here. Why? Because if this area gets busted from a euro standpoint, with all of the support, all of the resistance actually that's in there right now, I can tell you the euro is on its way to the moon. And it very well may be, but it is not on its way to the moon today, and today is what you're preparing for. And that is where we just see right now what is a healthy retracement. Didn't get much volume in yesterday's move down. I don't expect us to see much volume in today's move down. Why? This is the second to last Friday left of the summer, isn't it? Right? You've got this Friday, then you've got next Friday, and we go into Labor Day, and isn't summer over? Now, when we live in Florida, summer is almost kind of like a year-round season for us, but summer is over, basically. So you got to expect that people are on vacation all over the place, and I would expect to see a low-volume day. I expect to see low volume yesterday. So let's not read too much into volume. Let's actually watch price and see where it goes during today's trading session. When we get back, folks, we'll go see how these markets are going to open. We'll see what's going to be popping and dropping. You got Aruba Networks. That is the leader in the clubhouse, dollar-wise on the way up. They closed at 16.92. In the pre-market, they're traded at 19.43. Autodesk, they are the leader in the clubhouse on the way down. Closed at 35.71, traded at 27.90. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. Slow to get out of the gate. You got the Dow down 8, S&P off 2, Composite down 7, small caps off 2 as well. Microsoft down 4 ticks, Intel off 9, Google up 20 cents, Cisco down 12. Pennies, you got Apple off $4 and change. If you go take a look at what's popping and what's dropping. Popping, you got Madison Square Gardens. Oh, that's nice. MSG, yeah, that's not the stuff you put in your Chinese food. This is the Madison Square Garden Corp. They are trading up $3.60. That's up 10% this morning. What is that all about? Did they have a earnings release? They did. Revenues $332 million versus $233. Net income $28.5 versus $8.5. Not a bad showing there. Again, up by 9% this morning. You got Microsystems Inc., MCRS, trading up 7%. That's up $3 and change. Aruba Networks up 14%, up $2.50. Eli Lilly, LLY, the ticker symbol. They're up 6% this morning. Amazon up just slightly, up $1 and change. Nike up 80 cents. That's really all that. Oh, Rosetta Stone. Is it Rosetta Stone? No, it's not. But that's all that's really up with any significant dollar-wise on the way up. Let's take a look at what's popping to the downside here, dropping to the downside. You got Autodesk, ADSK. They're off ADSK. They're off 18% this morning, off $6 and change. Apple down $4 now, about 0.6%. Salesforce Innovation off 2.25%. HMS Holdings They are HMSY is their ticker symbol. They're down, it looks like about 7% this morning. Westport Innovations, WPRT, trading off 5%. Baidu off another 1%. Baidu just continues to get hammered. Adobe down $1.50. Lululemon off $1.50. Yum Brands off $1. Netflix off $1. Informatica off $1. And that is what's going on in the market stock-wise. Let's go take a look at some of these stocks here. Where is that little tab? And there we go. Okay, so let's go take a look at this. We can take a look at Aruba Networks. I should have that out here. We were looking at that last night, I believe. So Aruba Networks, ARUN is the ticker symbol. And as soon as I can find it in this spaghetti mess, there we go, ARUN, we'll go ahead and take a look at the larger. So you've got this gapping up this morning. I don't recall, but let's go see what this is gapping up into. This is gapping up, that's nice. That is gapping up here into a downdraft. It can't even get all the way up there. That downdraft is from February the 17th out here. That is also really trying to get back and make a 100% move. So you do have A to B equals CD. On this, you certainly have that forming here. Today so far, you've done 1.5 million shares. And the swing point that it's really taking out, 4.2 million shares out here. So let's go take a look at the ABC that Aruba Networks is forming here. Let's take a look at the easier one. Here's your A, here's your B point, your A point. I'll come back and tell you exactly when that was I'm using. This is the smaller one. This is the August 3rd level. 1274 was the low. The B point coming in on August the 16th. I'm using 1774, 4.2 million again. You're up and over that today. You will be up and over that with volume. 1-to-1 takes you to 2145. That would be your 100% move. Let's go see if that takes you into really into your downdraft. So looks like Aruba Networks wants to get up to a price point of 2188 before it gives it up again next time. Let's go take a look at Madison Square Garden. Let's go take a look at that chart out there. MSG being the ticker symbol, and see what that is doing. It is gapping up this morning here. Looks like it also has some volume behind the move. So let's pull this back further. So this is an IPO this is one of those IPOs that's doing very nicely out here. Most certainly it is. So you got an IPO January 25th, 2010. It's trading highs. So let's take a look at the first A to B equals CD out there. I'm going to go ahead and put this on a weekly chart. It's going to be a little bit easier just simply to see that A, B, C, D. So let's go take a look at the A point. That's going to be the low that came in the week of February 12, 2010. The low there, $16.35. Your B point is April 15th when it makes a high of 30.21. Does that with 1.6 million shares. Let's come back and take a look at that B point. And because this thing has been a rocket ship. Look at that little rocket ship out there. Take a look at the price coming off of that C leg there. Is that stronger or weaker than that A to B leg? It's why you want to understand your ABCs. So we're going to take a look at a couple of different things. Number one, let's take a look at the volume of Madison Square Garden as across the B point out there. I'm just going to put the lines on the chart. Makes it a whole lot easier to see exactly what is going on out here. So we'll take a look at Madison Square Garden. The volume that it had as it made that B point, 1.6 million shares. As it crossed at 1.3, but really the following day, or the following week, February 17th, it gaps up. And it has volume, so it has a confirmed A to B equals CD. Does that with 3.8 million shares. That's the last time this had any real volume in it. That high is 33.49. That is your level of support if Madison Square Gardens decides to fall from its chandelier out there. Got to be careful with this right now. It's made a 1 to 1.618, A to B equals CD. Oftentimes, if you had the art of timing the trade, you would know that when you do a 1 to 1.618, it gives you a higher probability of success of doing something different. However, with the move here on the inside of this A to B equals CD, I would say that Madison Square Garden is more likely on its way up to the 1 to 2 A to B equals CD. That would be up at $48.79. That is on MSG, not that stuff you put in your Chinese food out there. Let's go take a look at Microsystems. And I can say that because I actually used to own a Chinese food restaurant, folks. Most certainly did. I am a mean walker. MCRS. That means I can cook more than just egg foo young. So let's go take a look at Microsystems here. MCRS is the ticker symbol, and no, WOK, W-O-K. So we take a look at Microsystems here, gapping up this morning. It's got volume behind this move, 379,000 shares thus far. Let's go take a look and see what this thing is moving into. It looks like it completed an A to B equals CD down. Let's go take a look at that first here. That A point on this is going to be out at the highs on May 1st, May Day. Makes a high with 539,000 shares out at 58.49. Your B point on this is going to be the swing point from June 4th. Low is 48.60. Comes down with 743,000 shares. Does a shallow retracement. Has not completed that A to B equals CD. Looks like it may have done the junior version, the junior AB equals CD. Let me just go ahead and put that out here. And that it did. But if we take a look at this equity here, this was the area. Okay, so this, when it came down, when it was making its move down here, what this was doing was coming right back to a breakout area. And that's why this actually had wide price spread and accelerated volume. And this is why you want to make sure that when you're looking at a chart, the very first thing that you do is you go take a look at it and you identify volume. You do it on a daily, a weekly, and a monthly, and you want to have that notated. In this case here, what you're certainly looking for are stocks that have got wide price spread. And if you can be patient, oftentimes stocks are going to pull back to that area. In this case here, you had that wide price spread and accelerated volume on November 30th. Gaps up 2 million shares. For this stock, that is wide price spread and accelerated volume. You can see that's the biggest candle out there. Well, you can't see it's the biggest candle because you have to fill in the gap, but you can see it's the highest volume day. So in this past go-round, as the market pulls down, I'm going to go ahead and draw the line out here. That way you can see that, and we're going to take a look at where it came back to. Now, in this case here, when it's coming back to a breakout area, what you don't know is it's going to come back to the low of the gap up, or is it going to come all the way back to the prior candle? You'd prefer to see it come all the way back to the prior candle, which would be November 29th here. But here's the thing, folks, on this stock chart. It already did that. It came back to where it broke out. In fact, when you're taking a look at that here, it was coming right back into as it broke out. You'd also take a look at that November 28th date. That was the day after we came, I think we came back from Thanksgiving. That was November 25th. That was the low that was put in here, down at the 42.98. Then on Monday, it goes ahead and it gaps up, so you got that little open window out there, and it does that with volume. So the real breakout came on November 25th on this thing here, but it had a couple of other signatures with wide price spread. So the original area for where the breakout occurred, it came back and it tested the November 28th level, and it did that on December 19th. It did that really for about 4 trading sessions. So this next time that it comes down, it comes back and all it's doing is testing that high volume area. So I would say that what this is telling me is those funds that were in there on November 30th, they're still in there, and they started to support it as soon as price got down there. You can see as the price moves down on July 23rd, it's pulling back with 390,000 shares. Again, that was going against 2 million shares. So, this thing here, it does have a valid break. This is making an A to B equals CD up. Let's go take a look at that. Your A point is coming off of the low that was coming back into that breakout area from July 23rd, 46.01. Your B point is that little doji candle out there on August 7th. That means that it was just simply resting. It's taking it out with volume today. It's already done a 1 to 1.618, A to B equals CD. And what it's running into right here, it's running into a little resistance here, a evening star candle out here. So this has got support. That's our resistance, I should say. This has got resistance in the 53.39 level. If it takes that out, it will travel all the way back up, I would say, into the swing point. Next swing point that I would say would travel up to is May 11th out there. But it is running into, I'm your pilot, and I'm putting on your overhead turbulence because it's running up into a resistance area. That was on Microsystems. Let's go take a look at Watson Pharmaceutical. We were looking at that. I was looking at that last night with Ken Shreve as he was as I was filling in for Tom while he was at a function last night for the Tiger Real Estate Fund. And if you've got an interest if you've got an interest in taking strong assets and putting them into weak assets, which is really what all successful people do, go to the homepage at tfnn.com, and over on the right-hand side, you'll see a little button there for the Tiger Real Estate Fund. That'll help you to understand exactly what is going on out there. So Watson Pharmaceuticals here, gapping up this morning. Volume behind the move, 249,000 shares. what you want to see if you're in this equity, you want to see it hold the price point of $81 even Steven. That is the last little gap up that it had on July 26th out there, 2.2 million shares. This thing has 3 gaps here. Now, this is not an exhaustion gap because this is the it's not as large as the first one. The first one I'm referring to goes back to April 26, 2012. So that is on Watson Pharmaceuticals. They are trading up about 3.5% this morning. Let's go take a look at Autodesk. See what Autodesk is doing. ADSK, the ticker symbol, down 17% this morning. So as we take a look at Autodesk, where is that little puppy on my chart here? There we go. Autodesk right in front of me. X marks the spot. So as you take a look at Autodesk, gap down this morning. It has volume behind this gap down. This one here, gaps down. So far it's done 7.2 million shares today. That's after yesterday going back and testing an original breakdown area. Breakouts and breakdowns, folks. If you can really just learn the breakout pattern. Most people think in minds of bullish. Most people think in the mind of things just simply moving up. Well, once you learn one pattern, you learn them both, quite frankly, because a breakout, all you have to do is flip the chart over and you would be taking a look at a breakdown. So it's really just learning one pattern out here. In this case here, as we take a look at Autodesk, it really broke down the days of May 17th and May 18th. Why? Because it gaps down with monster volume, 24 million shares on the way down. So on a breakout, all you have to do is be patient and wait for a stock to come back to a breakout area, and then you buy it, right? Well, on a breakdown, all you have to do is be patient and wait for a stock to come back to the breakdown area and sell it. This case here gave you a great signal yesterday. Yesterday it gets up into that area, gets all the way back to really where it broke down, gets back and actually tests the swing point from May 16th. Now, the volume here, when you're benchmarking volume, what you want to be paying attention to, ideally, and not oftentimes do things always set up ideally, but ideally you'd come into the May 15th swing point with less than 3.6 million shares. What did it do yesterday? It gets up there with 5.7 million shares. But what's really going against, folks, is that 24 million shares on the way down. And so, boom, it broke out. Now, you've got somebody trying to push this thing up here this morning, but Autodesk, really what it wants to do is these are the guys that are trying to push it up out here. So if you take this chart all the way back, it's where you've got volume down here at the lows August 19th, and that does not look like that has been tested. But that is where you've got the bulls in here truly trying to push Autodesk up. If you take a look at that volume, that was 20 million shares on the way down. The high of that area is $27.40. It has not made its way all the way down there. But if you be patient, it will. And it looks like to me Autodesk wants to really test that low, which would be $22.99. That is Autodesk ADSK out there. You got Apple trading off $4. Let's go take a look at HM. Let me see the largest percentage. So yeah, it looks like HMS Holdings, HMSY is the ticker symbol. That's down about 8%. Let's go see what HMSY is doing. So you're gapping down. Let's take a look. So here's one coming into an area where it last broke out. Let's say, look at the crazy signatures on this stock chart here. I don't know what they do, but and I don't have a moment. But this thing here, folks, it's trading inside the last sign of strength that it had, June 28th. Trading inside there. This is going to come back to $27.41. You're at $31.97 right now. 877-927-6648. Today, folks, today is a wonderful day. We got Basil Chapman, Nico DeHaan, Daryl Martin, David White, Ken Shreve, and the Tom O'Brien Show. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Hi-ho silver. Let's go take a look at the silver contract out there. Now, if you do track the silver contract, what you'd like to do is there's a couple of patterns out here. Go take a look at first the descending tops trend line. You go ahead and you start with the high out there in silver, April 25th, out at $49.82. So your next trend point touch that I would do is the swing point from February 29th. The silver was up at $37.58. What you'll see here in yesterday's move, it came right into that area right now acting as a resistance area. What else was happening yesterday? Well, yesterday, if you take a look at just simply the swing point from June 6th, that was its most recent high during this little consolidation period. That was out at a price point of $29.86. If you just simply take the expansion of that high all the way down to the low, on June 28th, as it was testing a big hammer candle, was testing it on lighter volume. That's when it made a low of 26.10. If you just simply take that dollar difference, folks, multiply that times 1.272, because you may not have Fibonacci expansion or contraction tools on your system. Maybe you can't draw a butterfly pattern, but you can do the math. All you got to do is a little bit of detail out there. Well, what you've got is a 1.272 butterfly. You would take that math difference, you'd multiply times 1.272, add it to that low of $26.10. That would give you your projection of where you had silver get to yesterday. You'd want to go ahead and draw the one, or calculate what the 1.618 expansion is as well, because if this area here fails, that is where price will travel to. What you also have setting up here, so you get a 1.272 butterfly sell pattern coming right into that long-term descending tops line. What else do you have going on out there? Well, if you just simply go from the most recent high, that being the February 29th swing point, major swing point out there. If you go from that high down to the low, what you would get is a 0.382 retracement. That's at the $30.49 range. You're trading at $30.57 right now. So you're coming up against a normal area of resistance here right now. What else do you have going on out there? Well, how about go back to Steve's hammer? And this was a beauty hammer candle, folks. You'd be going back to September 26th. You know, that one day you had silver push all the way down to $26.15, closing out at $30.78, 78.5 pennies out there. And what you've got is the high of that hammer. The high of that hammer, $30.97. Quite frankly, until you really break that candle, folks, you know, you've got a breakout, and this looks great. What I would do is I would be patient here and wait for silver to pull back. Silver should pull back. It is up against some very, very strong resistance areas. Doesn't mean it will, but it should. And what you should do is you should buy the next retracement on silver. Could be an intraday pattern. It could be something like pulling all the way back to where this thing really broke out. If you take a look at those candles, that would be coming back into the August 20th time period here. And all you have to really do is take a look at a retracement off of the last swing point low on silver. That would be the August 15th low, $27.43. Come all the way up to the high that was put in yesterday. And what you'll see is the 0.618 area is $28.71. And the 786, $28.14. I'd start taking a position in silver at $28.71. I'd make sure I've got a wide enough stop. And I would expect to also add to my position, so I would scale in. I would come in at about $28.14 as well. Now, what I would hope to be finding is some type of intraday A to B equals CD pattern, and that is on silver, folks. Stay tuned today because it is Fabulous Friday out here. We got Mr. Basil Chapman, then Nico Dehaan. Nico's got a special guest today, Paige. I don't remember Paige's last name, but a great guest. Then we've got Daryl Martin and the gang. Can't remember the lineup here, but folks, stay tuned. Tom and I will be up next for the Nadex Bull Bear Option Hour. Have a great weekend, folks. Look forward to seeing you Monday, if not in a few.